And the critical part here is that the trend really needs to be combined with your Fib analysis to give you a high probability bet. So why is that? Well, Fibonacci just by itself, I mean, if you only use Fibonacci by itself, it's already a high probability trading strategy, okay? But when you add it with the trend, it makes it even stronger. So we have 1 and then we have 2 stars. What's next? This is going to be the squeeze. Who is familiar with the squeeze? Yes, yes, maybe so. Excellent, excellent. Okay, I'll show some charts as well. But basically what the squeeze is it's going to be a high probability moment in time where you want to jump on a trade. So in the options market, in order to make money, you need to get into a trade when it has a high probability of a greater than expected move setting up. Options are priced so that you will not make money if they trade in a normal manner. 70% of the time, tickers just trade sideways, don't really go anywhere, and if you buy options, you're going to lose money. That's what they're for, right? That's how the market makers price them. But if you buy them before there's a greater than expected move setting up, that is how you can actually make some money. The way that you identify that moment in time is going to be with the squeeze. So I don't know if any of you saw John Carter's presentation last night, maybe. So John is my primary trading mentor, and this is his strategy. So at this point, we have 3 stars. We have a trend, Fibonacci analysis, and then we have a distinct moment in time where we need to get into the trade, okay? That begs the question of how do we get in? Where? Where on the chart should we get in? Well, that part is going to be star number 4, which is the entry point. So you're not really going to find me buying breakouts. I like to buy things when they're on sale. Anybody like sales? Me, I do. So I really like to focus on buying when I have a sale, which is when I have a sufficient pullback with an edge, and I'll show you how to identify that. So those 4 factors together, I mean, that's just a typical 4-star. But the 5th star is really the most important part of this, and this comes from top-down sector analysis, which you can absolutely learn how to do. So this is the oomph. This is the extra little something that brings the setup from a 4 to a 5-star. This is the fundamental backing that comes from a boat versus tide analysis. So just like we're trying to stay with the tide when we're looking at the trend, we also want to stay with the overall tide of the overall market, okay? You don't want to be swimming against the tide. So, for example, if you have the NASDAQ that is completely tanking, do you want to buy Microsoft? I mean, I love Microsoft, don't get me wrong, but that would be going against the tide. So I also do a top-down index and sector analysis that leads me to identify the strongest sectors and indexes, and then I select tickers within those sectors and indexes that have this pattern, okay? So we're going to show a bunch of different examples. So why 5 stars? Well, each piece of the setup is strong by itself, but when it's combined, it's a magic formula. I studied the traders before me. Like I said, I combined it to create the monster setup. So first, we're just going to look at the pieces of the setup, and then we're going to look at the whole setup. So the squeeze. This is my favorite trading tool indicator. This is going to notify us of distinct moments in time where a ticker is setting up for a greater than expected move. Like I said before, to make money in the options market, you have to be able to recognize those times. You have to be able to use the tool and trade with it. That tool also, I mean, it's free in Thinkorswim. Thinkorswim is the platform that I use, and it's the main tool that we teach at Simpler Trading. So here's just an example of United Healthcare. Last week, one of the setups that I was talking about in the trading room is a long setup in healthcare. Why healthcare? Well, a variety of reasons. After midterms, we have a split Congress at this point. That's positive for healthcare. Additionally, if you look at the overall healthcare sector, you'll see that the healthcare sector, and when I say the healthcare sector, I'm looking at XLV, that has remained strong throughout the correction. Yes? Yes, it does. So, first of all, I mean, this is how we get to United Healthcare, okay? Why do I care about United Healthcare? Well, because it's in the healthcare sector, it's one of the strongest sectors. This is also one of the top weighted stocks within that sector, so it gives me really good movement. Then we look for the squeeze. So if you see these red dots right here, this right here is our squeeze tool, okay? And it's pretty simple once you learn how to read it, but the green dots are basically nothing. Green dots are just avoid, normal trend follow, doesn't matter. What I want is the squeeze. This is the high probability moment in time that a big move is gonna set up. So what we do in the options room is we work to find these signals on the charts that are in that strong sector at that moment in time. So because United Healthcare had a squeeze, because it's in a strong sector, and yes, like you're saying, how many dots does it have? So the dots, this is a daily chart, okay? So each one of these bars is a day. You really want to see 3 to 5 days of consolidation, because what the squeeze is consolidation. It's telling you that there's compression of price, there's consolidation, and it's just energy that's bottled up and it's trapped. So what happens is when you have trapped up energy is it's going to explode. So the goal here is to be in that before it explodes so that you can make your money, okay? So what do is we look for the squeeze. This one in particular did have 6 dots. But what I like to do is I like to time it with the ready, aim, fire, buy signal. So that for me is the perfect entry signal with the squeeze. Sometimes it'll come a little bit before, but you can also just use your moving averages if you do not have this tool. So I teach it both different ways. If you don't have the tool, you can use moving averages. I like the arrow better personally, but moving averages are fine. Yes? These ones right here? So that's going to be momentum. So the green, you see the green and red dots, that's either consolidation or no consolidation, basically. The green is just basically ignore. The red is what you're looking for, that's the consolidation. But this is the momentum oscillator. So it's showing you rising or falling momentum. So you can see the light blue bars. It's kind of hard to see with that one right there. But that's rising momentum. And then the dark blue bars are still positive momentum, but the momentum's waning. So that can also help you time your entries on the trade. This one, as you can see, it had pulled back. It corrected during the October correction that we had. However, I mean, this correction that United Healthcare experienced was nothing compared to what some of our other sectors have experienced. So overall, it has relative strength, which again is a reason why it's a 5-star. Yes? Yeah, this one right here. This one's called the ready, aim, fire. Ready, aim, fire. So that one is a proprietary tool that we use. All of the tools on my chart are free except for that one. I absolutely love it though. One of our technicians, David Starr, created it, and I think it's a phenomenal entry and exit tool. The other one that I have been using as well is the volume zone oscillator. This one is free, and it's pretty similar. I mean, it's not the same thing, but I do teach that one as well. But everything else on this chart is free. Moving averages, the grab candles, those are going to be the colored candles that help you identify the shifts in the trend, trending versus chop. The squeeze is going to be free in Thinkorswim. That's the only one that is a paid one, and this is also free within Thinkorswim. And also on our website at simplertrading.com, just right on the, on the free part of the site, you can go there, simplertrading.com, click on traders, and you can click on my name, and it explains every single thing that's on my chart, how to set up your charts exactly like mine. So if that's something that you're interested in, you can find that on our website. Yes? So the candle color is determined based on the relationship to the moving averages. So this is going to be the grab candles, and they're going to be green as long as they are closing above the 34 EMA. So, I mean, The basic part that you need to know is how to read them to identify the trend. When it's green, and this is part of the last presentation that I just did as far as recognizing the shift, but when the candles are green, you're in a clear trend, all right? Green, green, green. You get a blue, that's the warning sign, I call it, that the trend is starting to shift. However, if you get a blue and it just pulls back to your support and then goes higher again, that's very normal in the context of the trend. What you're looking for is a shift. So you can see that on United Healthcare, if you saw my last presentation, we didn't get a clear shift in trend, okay, throughout this last correction. Why didn't we get a clear shift in trend? Well, we still have candles that are printing above the moving averages. This is the 50, 100, and 200. A lot of different charts have fallen far below here. So overall, we haven't seen a shift in trend. We're still holding a key area of support. So I'm still going to be trading this to the long side. So with this one, really what I wanted to show with this is that you want to be in it before it takes off. That is the squeeze. What is the next part of that? Fibonacci analysis. So markets ebb and flow. They're not going to go straight up or straight down. However, we can quantify these ebbs and flows. They can be measured with a reasonable probability of accuracy, and this is done through Fibonacci and technical analysis. Low-risk options meant for volatile market conditions are put into place at the right moments in time when we are using Fibonacci. So those of you who may know Carolyn Borodin, she's our Fibonacci queen. This is her book right here if you want to learn more about Fibonacci and how to draw fib lines yourself. That is where I learned how to draw my fib levels. All right, so what's the next part of the setup? The next part is the fundamental analysis. These are two different resources I use, Chaikin as well as Investors Business Daily, but what you're really looking for is you're looking for a combination of a technical pattern and then something that has a strong fundamental backing. So like I explained with healthcare, it's holding up quite well right now. The results of the midterm elections were positive for healthcare. And then if you go into any type of fundamental analysis platform, you're going to find strong, fundamentally ranked healthcare stocks that we can continue trading to the upside in this current market condition. It's honestly the only sector in addition to utilities that I still want to be trading to the upside in this current market condition. So before our current market condition that we're in right now, really most of the year was focused on technology, discretionary, and healthcare. But due to the shift that we've seen in October, we have to make that switch and flip it around and stick with now the sectors that are fundamentally the strongest. Does that all make sense? All right. So looking at Chaikin, I mean, this is just an example of fundamental analysis. The fundamentals in Facebook are showing us relative strength. So, I mean, any other platform, I know my dad likes to use Fidelity. They have really good fundamentals in there. But really what you're looking for is money flow and then relative strength. And then also the overall trend in industry and what's really popular right now. So I just wanted to show you here, and if you're not familiar with this platform, that's completely fine. But overall, you're just looking for the trend. You're looking at the relative industry. And then you want to see the money flow and the relative strength. So especially on days where the market's down, that's a really easy spot to go in and find something that has a lot of relative strength. So what are we looking for? We're looking for the highest level of confluence. We want the squeeze, fib levels, fundamental analysis. These are all excellent trading strategies, but together they're even stronger. It's the combination that brings them from good to great, and that is what I call the 5-star. So how do we find it? Well, we've talked a little bit about it already. But what you want to do is you want to start overall with the sectors. So in my daily analysis in the trading room and in our nightly videos, I always start first with the indexes. I look at the Russell, I look at the NASDAQ, I look at the S&Ps, I look at the Dow. First thing I do always. I want to see which one's the strongest, I want to see which one's the weakest. Next, after that, I look at the sector spiders. So within the S&Ps, you have your sectors: discretionary, staples, energy. And by the way, this is from a free website, sectorspider.com, free. You can go in there and check it out. We have a lot of really good information, and I use it every day. So you can go into the different sectors, and you got to quantify this. And it might sound like a lot of work, but honestly, once you have the formula down, it's really not, because then you'll use the same sectors over and over and over again for the next 3 or 4 months. So you really just have to learn how to do it from the beginning, and then you just repeat it. So you start with the sectors, you narrow it down. I want to know, number one, what one is the strongest? Which one did we say is the strongest? Which two? Yeah, healthcare and utilities. Tech is kind of teetering on the brink of maybe falling off a cliff right now, so I'm kind of trying to avoid that because I really like to stick with the trend. And then we also want to look at the weakest sectors, because that is where we're going to look for some shorting opportunities. The sectors that are choppy or volatile in nature or counter trend, I personally like to avoid. I don't really like trying to come in and catch a falling knife. I don't like counter trend trades. People ask me for them all the time in the trading room, and I say, hey, here you go. I'll give you one if you really want it, but you're going to have to do it without me. So, for example, energy. Has everyone seen the fall that we've had in crude for the last 2 weeks or so? And XLE? I mean, you can look at it and say, yes, it's at a discount, but I like to avoid the overall sector when it's so counter trend in nature, unless you're going to stick to the short side. Yes? Mm-hmm. Yes. Well, so what I'm looking at for seasonality for the Santa rally, Christmas time trade, actually is bargain retailers. So you don't have to just stick with the sector spiders. You can also stick with, like you said, a subsector, maybe cloud stocks, or I like the retail stocks right now. So stuff like TJ Maxx, Burlington Coat Factory. I'm in a long trade, Ollie Holdings, OLLI. Those actually have very good seasonality going into November and December, and you're absolutely right. So that can be your 5th star. So those I'm looking at as well. We'll go ahead and look at some chart examples. So like I was saying, they usually rotate quarterly. I mean, you really don't have to do this entire analysis every single day. I do, because I'm running the trading room and I put it on display. But really, you want to rotate it quarterly. So last quarter, it was about XLY, XLK, and XLV. So that was consumer discretionary, Nike, Amazon, anyone? Amazon has been one of my #1 most traded tickers because it was in a fantastic trend. Nike as well, but when that trend broke and when the trend shift occurred, then I had to take that off my list. It was no longer that high probability trending bet. Technology also has been my favorite this year. I've been trading it over and over again. Microsoft, Apple, Google, I know that's shifted sectors, but those are really fun to trade. But at this point in time, with the correction that we've seen in October, honestly, I think they're going to head lower, and they're just teetering on a ledge right now. So they don't have the trending factor that I'm looking for. Healthcare has remained strong, like we talked about. I also will look at honey badgers. What is a honey badger? A honey badger is a stock like Square. Okay, does anybody know what Square is? That little app that you can plug into your iPhone. So this is something that, and this is, this isn't updated as of today, but this is one that I have been trading all year. And it was a honey badger because it had really strong relative strength. And it was kind of just a random stock that there were days the market was down and the thing's still up 2%. So because it had strong relative strength, because it has this beautiful trend, that was a 5-star. So as you can see, I mean, looking at the 5-star, why is it a 5-star? Well, it has a trend. How do I quantify the trend? We have stacked moving averages. You see the moving averages right here? You have blue, green, red, yellow, pink. Do you see how they're neatly stacked? It's a very nice, neat line. So that's indicative of a strong trend. You also have the moving averages that are on top of each other. So you have them in order. Did I keep pushing something? You have them in order. You have the 8, the 21, the 34, the 50, 100, and then 200 that are stacked in order in a nice logical fashion. You also have green grab candles. So, I mean, that's the easiest way to look at it. The price is printing above the 34 EMA, which is why the candles are green. But when you look at the chart, it's just a very quick visual. You can see clearly it's in a trend. So that's another part that I have had to shift a little bit through the corrections this year. When we're in a really nice bullish trending market, I wanted to see price at least above the 34 EMA. Now, of course, with some of the shifts that we've had, I've lowered it a little bit to about the 50 simple because that's indicative of a strong trend. You have those price bars printing above your moving averages. All right, so Amazon. Of course, this was one that has shifted over the course of the past month. But I still wanted to show it as an example because it was a perfect 5-star to the upside. So what you're looking for, again, really nice trend. You're looking for distinct moments in time with the squeeze that you can come in and buy long options on this thing. So you're not buying it any time. You're coming in and buying it on a pullback buy with a squeeze where you have an edge where you can trade it higher. So here, here, and here. So what we do in the options room is, we just sit and wait and we stalk these things. When we find charts that look like that, we stalk them and we wait till they have a distinct moment in time, and then we strike with our options. So what are the current 5 stars? Right now, honestly, I'm focusing on the communications sector. So I don't know if you know, but there's a new communications sector that has the likes of Netflix, Facebook, Google. And that is in a solid downtrend. So we're looking at those to short side. Utilities and healthcare, like I said, upside, and some honey badgers. So let's look at the 5-star to the downside. This is a consistent tide to ride. Why? All right, well, it's in a solid downtrend. Okay, that's great, but how do we quantify it? We always need to quantify it with rules. We can't just say, oh, well, it looks like a downtrend. You have to look at your rules. We have stacked moving averages. We have price that's printing below the moving averages. We have price that continues to retrace the moving averages and fall. You can measure that with Fibonacci. You have red grab candles. And like I said, the last one right here, it respects symmetry and retracements, which is our Fibonacci component. So we have identified this sector as it's in a downtrend, all right? So this is the tide. We identify the sector, communications, it's continuing to trade lower. All right, that's great. So now what do? How do we make money with it? That's the key part here. Well, in the options market, what we're trying to do on an aggressive directional basis is we're trying to identify the boat that's going to make us the most amount of money within that tide. So where do we look? Go back to that website, sectorspider.com. You check out, all right, what stocks are within this sector? Google's one of them. So does Google fit our criteria for downtrend? Anyone? Maybe yes or no? Yes. So we want the boat to be going with the tide. It just makes it easier. You have the sector that is the tide. You have the boat that is Google, and they're both going down together in confluence. So you can then trade that to the downside. Why would we trade this one? Well, we have a squeeze. Okay, number 1, downtrend. Number 2, I have some levels of symmetry right here. This is a pullback, sell decision, Fibonacci. Number 3, we have a squeeze consolidation before a big move. And then we have an entry with an edge. Why is this an entry with an edge? We're looking for the price bars to pull back 2 are moving averages, overlap with symmetry, and then it has the 5th star, the oomph. That is the fact that it is in a sector that's in an overall downtrend. So they're moving in confluence. All right, so what about the next one? Facebook. So this is another one of our trades from the trading room. Why choose Facebook to the downside? Well, we already identified the sector. Let's look at Facebook. Okay, great. How do we make money with it? Well, you have to identify the moment in time to get into it. Where is that moment in time? Well, there's a couple spots here. This spot right here with the squeeze. You can see you got to pull back, squeeze, down. Okay, after it goes down, makes the extension. You look for it to pull back again. You have a perfect area of symmetry. You have a squeeze, and boom, down she goes. So if you check out Facebook, I covered that one this morning, actually, in the trading room. So, you know, we're just looking for the boats within the tide that we can trade and make money on, and that's one of my favorites. Netflix also. Netflix had a switch. So for those of you who were in my last presentation where I was talking about the switch, this is where the switch happened in Netflix. Switch happened in Netflix right here. We have a switch from an uptrend to what was then chop, but at this point, after our last earnings report, this is now a downtrend. It's a new downtrend, but it's still a downtrend. So what do? We look for a spot where we can trade it to the downside. Now, in this example, the one thing that we don't have on it is a squeeze. I do prefer to have a squeeze, but it's still a nice pullback sell decision, looking for a lower target about 254. So the next one's Verizon. Verizon is in an uptrend, nice overall stack pattern, but it's not in confluence with the overall sector. So Verizon is in the communications sector. So while you can trade this stuff for sure, and if you look at the chart and you just say, well, you know, it's trading higher, I have a squeeze, why don't we buy it? You can, and that's great. It just wouldn't really qualify as the 5-star because it's moving out of confluence with the overall sector. So I'm trying to focus on the best ones that are moving in confluence together. Here is another sector that I've been trading to the downside. This is the KWEB. This is the Chinese internet stocks. So the KWEB is the Chinese internet ETF. As you can see, I mean, there's been a lot of tariff-related news and this and that ever since June. This is a daily chart. You can see, for those of you who are in the last presentation again, that the switch happened right about here. So at this point, Chinese internet stocks are in a clear downtrend, and that gives me a tide to then trade. You can just trade the ETF if you want, but really what I like to do is look for the stocks within that ETF and then trade those. So we identified the KWEB. This is not looking good. It looks like it's going to make another leg lower, so what do? We look within that ETF, and we look for stocks within that ETF. Again, something very easy to search for online, free. You can go into sectorspider.com, ETFDB, and then you can flip through charts. So after I identify the KWEB, I look at Alibaba. Clearly, this is in a downtrend. Look at our rules, stacked moving averages, price that retraces to the moving averages and falls, red grab candles. We have symmetry, we have resistance here, and we have a squeeze. So that gives me my next setup to the short side in Alibaba. Yes? Yes, default settings on the squeeze. Any other questions? This one right here? Yeah. Yes, this is what we call the slingshot squeeze sometimes. So you're going to have, and I'll get you next. So the momentum is critical, but what trumps the momentum for me, which is something that I've done a little bit differently than John, because I am more of a trend follower than John is I really like to combine that with a trend. So yes, you do have upwards momentum here. However, it's coming right into symmetry. So symmetry honestly trumps that. If you look at these past retracements right here, boom, 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 boom. This move is exactly the same. It's coming right into resistance. We're still in a downtrend and we got a sell signal right here. So what I call that is the slingshot squeeze, which is where the momentum looks like it's trading higher, but then it'll flip around on you. So I look to quantify that based on the overall trend in Fib. Yep. Oh, sure. These, the Ready Aim Fire. So the Ready Aim Fire is really an overbought, oversold indicator that is really good for entries and exits. So it's kind of a nuanced indicator, but what you're really looking for is a major signal. So a major signal is going to be the overlap of the green as well as the purple. And you also want it to be either overbought, which is above this blue line, or oversold, which is below this blue line. So as you can see, this one right here is an overlap signal that is overbought, that's telling you that you can look for a reversal at that area of resistance. So to use the system, you really need a few things. Number one, you need to be able to identify the 5-star chart. That comes through technical analysis, and honestly, you just have to look at charts. Look at them, read them. You get to a point, and this is something that John always told me, was it takes you 3 seconds. You should be able to look at a chart and say, is that a good setup? And in the beginning, I hated it when he said that because it stressed me out so much because I could never look at a chart and see if it was a good setup. And I said, tell me what is a good setup. I don't understand. But when you do it over and over and over again and you learn the pattern and you use the specific rules, that is how you learn, and that's how you go from being someone who doesn't know anything about trading to having intuition. Because you don't get to be a trader for 30 years and just wake up one day with intuition. You have to start with the patterns, with the rules, A, B, C, D, and then after a while, you wake up and you see that and you have that intuition. That's a good one. Does that all make sense? So number one, you have to be able to identify the 5-star chart. Number two, you need knowledge of option strategies, or I mean, you can just use it for stocks and use it on kind of like a quarterly rotation basis. Then you also need the right mindset. So you have to just use your patience and practice to try and learn it yourself. So after finding the 5-star, what do? Well, you have to learn how to trade it. Number one, we already talked about the setup. The 5-star is a setup, all right? That's once you find one, you can say to yourself, hey, I have a setup. All right, great. Now what do? You need to identify what strategy you're going to use. It's part of what we do in the trading room. We talk about which strategies we like to use, and then we go through and we teach the variety of these strategies. We teach the entries, we teach the stops, which primarily come from Fibonacci, and then profit target, again, which comes from Fibonacci. I can tell you that my favorite strategies are going to be buying long calls or puts. So when I'm buying a long call, typically with a 5-star chart, I'm going to buy it 23 to 30 days out. And I'm usually going to buy a Delta 70. So why a Delta 70? Delta 70 because it's in the money enough that it will maintain its value in volatility. And it's, typically, I hate to say a good price because it's kind of relative to everyone. But I look to trade 5-star charts that are cheaper in nature where I can get a Delta 70 option for between $2 and $10 for a call. I'm not buying, one call on Amazon for $3,500. Really trying to stick between 2 and about $10. And if you trade stuff like MasterCard, Visa, the trade that I did on Wells Fargo, I mean, these calls are $2.40 a contract. So I like to stick with that. You can buy out of the money calls or puts. I will do Delta 50s occasionally. Usually I'm only going to do that around earnings for a variety of reasons. That's a different setup that we like to teach. But for the most part, I stick with the Delta 70s. Another thing that I like to do is I like to sell credit spreads, and I like to buy butterflies. So it's a whole lot to get into, but for the most part with the 5-star strategy, those are the option strategies that I'm going to use. All right, so even in volatility, I mean, like we've been talking about a lot today, especially in volatility, we need to look for high probability patterns. You need to know where to look. You need to start with the top-down analysis. And you have to keep in mind that there's always going to be a bull market somewhere, right? Maybe it'll be in bonds, or maybe it'll be in, whatever, healthcare right now. Right now, surprisingly, the video that I did tonight was about utilities, looking like it's setting up to the long side. So you can always find something to trade to the upside. It's just going to shift, usually on a quarterly basis. And you can also find stuff to trade on the downside. You just have to recognize your favorites and then rinse and repeat over and over again. So to conclude, these are the 5-star steps to success. Like we talked about, identify the overall trend, identify the trend in the sectors, select the tide with the most consistency, and then look for a boat within that tide that aligns and has a high probability moment in time, which is the squeeze. And then you come in with your option strategies and trade it. So for me, I wasn't always a trader. I used to teach elementary school. I learned trading options with my son following me around everywhere. This is actually the first time that I came up on stage where John was teaching me how to draw a fib level when I was an attendee, which was awesome. And then now, this is what I do, and I absolutely love it. So if you want to join me, you can join me at Simpler Trading. You go to simplertrading.com/join. I run Foundation, which is going to be our service for anyone wanting to get into trading options. Within that service, I always do a weekly recap, which comes out on Fridays, which I'll have a couple different trades in there. And then I have Dear Simpler, which is a video segment, basically a trading advice column. People write, hey, Danielle, this happened. I don't know what to do. And then I create a video, send it out. We also have Simpler Tech within that to help you get set up on your charts. Make sure you got all your fibs down, so you can follow along and learn. But that's where you can find me. And also on Twitter, like I said, there's my email. Love to hear your feedback, or give me a follow on Twitter. And if you put in your email, or I'm sorry, not your email, but if you go to this link right here, you can download the slides. So slides are all included. Just go to simplertrading.com/Danielle. And yes, you can put in your name and email there, and then you will get the slides immediately. So that's all I have. Thank you so much. Do you have a question?